Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, December 4th. Okay, let's dive right into it this morning. Don't forget that we've got non-farm payrolls. I believe those break at 8:30 this morning. We'll have to see if that's going to be a market-moving event or if how much positive or negative the print is and how it's perceived by the market. That's really the only thing that's important at this point is perception and reaction, not the actual number itself. It's very much like earnings or any other type event where all we're interested in is the reaction, not the whys and the what fors, but what did traders collectively do. We saw that very dramatically with Salesforce, CRM in the purchase of Slack, just taken out to the woodshed and beaten up. Now, that's happened before, and the stock comes back. So it may end up proving to be a buying opportunity, but we've got our bracket trade set up, which we'll go over in a few minutes, on a way we can trade that going forward. So anyhow, at the broad index level yesterday, really nothing happened at the end of the day. We had some fireworks during the day, but we'll get into that. So we've got this wedge, rising wedge here with a $3 gap between 365 and 362. For active traders, I think 365 is your line. You don't want to sit idly by for a $3 gap fill. At least tactically, you want to get short on a position to either make money on your whole account or simply to hedge out any of your longs that you're going to be sitting in while that corrective activity takes place. So on SPY, 365 is an important level to watch. Anything above that keeps things bullish. Now I've drawn that little wedge in on this 30-minute chart, and yesterday we actually had a separate video about positioning and thinking about what may or may not happen from here to the end of the year. And we talked about the red bar from nowhere with sentiment really stretched and everything kind of pulled tight, the rubber band pulled tight, if you will. And yesterday, into the close, we got news from Pfizer that they had some issues in their supply chain and that they were only going to be able to deliver half of the vaccines between now and the end of the year that they had anticipated in delivering. And those automated algo readers, just pulled the rug out faster than you can even think. You can be looking at every tick and you just can't even think that fast. And no matter what we said yesterday about, being ready for a red bar and it can be out there for any reason or no reason, that's all fine to say that. But when you're right in front of the screen, and you've got your little portfolio of longs, that hits you like a ton of bricks. It may not knock you off center, but you sure feel it. And having a game plan that you can lean on when your psychology is hit like that is really, really important. Now notice on the spike lower, did not breach this 365 level. So we've got good levels here. I think, again, I'll state anything north of 365, I think is okay. As long as we, if we break out, all the better. But as long as we stay within the wedge, we're fine. We just don't want to break out or excuse me, break down and then go into this gap fill mode, because now we're looking at 367 to 362. That's $5. I mean, you would feel that, and then you'd be on the wrong side of the wedge, which is even more important, that there could be even more corrective activity. So pull together your game plan. Only have exposure to where you feel comfortable, because if there's another one of these that doesn't bounce back so nicely, you don't want to be obviously hung out to dry. Q's had a very soggy day yesterday. I was disappointed because I was long several names, and it just did not do anything, didn't perform. I have a 2-hour chart here with a trend line. As long as this grinds up through the trend, it's perfect. But on a break back below, say 304, you've got an open door back to 300 and potentially 297. So I think this 2-hour trend line seems important to my eye. And here is another look at the 30-minute chart with this little wedge. And you can see we dropped down below it, and now there was a bounce into the close, but we really got to get back up above 305 and make some progress sometime soon, or this is going to start look like a momentum bleed out and roll over. Even if it's not dramatic, I mean, you want to see upward progress continue to be made, because if you're not going up, you're either going down or sideways. So it only stands to reason we want to see this advance continue. But you can tell momentum's, while still positive, it's bleeding out, and RSI is getting down towards 50. So from a technical standpoint, we want to see RSI hold 50 and curl up, and we want to see a bull cross here on PPO on the 30-minute. IWM toggling between 181 and 185. I thought we had it yesterday. IWM was the leader. It was up 0.5%. Doesn't seem like a lot, but it was doing a lot better than SPY or the Qs. I actually intraday had gotten. Actually, it was when was it? Let's see, Wednesday. Yeah, Wednesday, late Wednesday afternoon. I got some 182.50 calls and held them overnight and was able to ride this up and then take it off. I took it off in here with a nice gain, and then I thought it was breaking out, and I let you know that I got some December 185s, which I still have, but then of course, they sold that close, so I've got some work to do there. But in general, just consolidating between 181 and 185. If you got to the low end of the box and it looked like it was going to hold, that's a good objective long location down here near 181. And here you can see it in an expanded level. So I had gotten long originally Wednesday here, got this, and then I thought we were breaking out, and then they reversed it and then came back down. So, I'm looking for a breakout here. I think the I still believe in the reflation back to normal trade, and I think IWM is going to remain strong. But I can't just sit in a position that's not working, so I'm going to have to still manage it. We can go through FANG very quickly. Nothing happened. It was very disappointing. We had 2 days ago, we had bold moves across most of the names, and we actually even had a bold move follow up, but then they faded it. I saw somewhere Facebook was getting sued again by the EU, blah, blah, blah. Bottom line is, above 280, it's still bullish, but I was looking for a continuation higher and didn't get that. Apple still looks strong. It didn't do anything yesterday, but it didn't fall apart either. So while a lot of the other FANG names backed off, Apple to me is just consolidating this move with a bull flag and looking for this breakout above 123.25, 123.50, right in that area. And if it can do that, your first stop is 125, and then I think you're looking at a push up towards 130. Tesla gapped higher yesterday with a big upgrade from Goldman, but it could not take out 600. Made a run at it, backed off in the afternoon. So now you've got a consolidation box between 560 and 600. So 600 is your near-term toggle today. And remember, it's Friday, so if you're into buying lottery tickets here and there on names that can really move, this might be a candidate, depending on which side of 600 you want to play. If you saw weakness or felt it would be weak, you can get a short against 600 and just simply look for a move back down towards 580. And if all the stars align, get a gap fill here, and you would be feeling really good going into the weekend with those, being able to cash in those lottery tickets. And, they call them lottery tickets for a reason. Most of the time you lose. So, do that in moderation. You can't be, a total moron about it, because the value on those things will change very, very quickly. So if you find yourself, in one of those positions that either stalls or starts going against you, get out right away, because the time value on those options that expire at 4 o'clock, you can, watch it by the second hand at that point, because they will decay very, very quickly. Microsoft, nothing. Was looking for a push up towards 216 to 1750. Did not get it. Nothing at all here. I think you could use 214 as your daily pivot today, but the real move is going to be, a breakout or a breakdown. There's plenty of money to be made inside the, this 212 to 216.50 range. It's just that, it doesn't have a particular bias or direction right now. It looks kind of, after it faded this surge here, then it's done nothing for 2 days. Amazon, again, just nothing going on yesterday, really. It traded below 3,200. 3,200 is definitely your pivot today. Above 3,200, you're looking for 3,250. And as long as it stays below 3,200, I favor 3,150. These $50 increments have been working fantastic. Google. I got frustrated yesterday. There was a nice big opening candle, and then they faded it. I thought I was home free. I was, envisioning grandeur and all that kind of stuff. And, they just faded it. You know, when you have options that are, you know, yesterday would have been expiring today, they change so fast. And, you know, this is a perfect example where you look at this chart and nothing honestly happened technically. I mean, if you didn't have a position and you looked at this, you would say, oh, it's, you know, it's consolidating in a flag after a nice move, you know, stay long. And that's absolutely 100% true. Nothing happened yesterday technically significant. But if you got options expiring tomorrow and nothing happens, or it goes against you $10, that's something. Okay? So, whereas, you know, a follow through after a day of consolidation would have been perfect and what I was looking for. You know, 2 days of consolidation, you know, basically killed the trade for me. Am I complaining? No, it was a great trade. You know, got it in here, held through the back test, got the move up here, missed exiting at the top, but did great on the trade. So, not complaining at all, but it did not play out the way I had hoped, obviously. So, but still looks the best of all the fangs, in my opinion. Same thing with Netflix. Got long here, you know, chances to get out, held through the back test, 2 big power candles out of the gate, feeling good, and then they started fading it. So I got out of that. I took a loss on that, which was disappointing because, again, the chart is now bullish. Just didn't get the follow through on options that are expiring, you know, today. And that's the chance you take by trading a weekly option. You have to be ready and willing to accept that volatility in the, you know, in the position with short dated, short duration options. Now, if someone else had bought back here, you know, and bought 3 weeks at a time or bought January calls, I mean, yesterday was nothing. That you just hold on because it has broken out above this 494, made a move higher, and has not dropped back below. So you can stay long and look for this gap fill today or next week. And I will still be looking for that going forward. I'm still bullish on FANG. It remains to be seen whether they're going to be leaders, followers, you know, hold their own. Anything's possible. But I'm still in the camp that with the recent igniting candles, that there is some underlying strength there that will ultimately follow through. CRM, we've got this bracket trade. If you're new to the channel and new to bracket trades, we had a gap down on CRM on the purchase of Slack. Now we've got a very well defined 1 hour trading range. We've got a $18 to $20 gap above to fill, and we've got space below on a breakdown. So what I've done in my system is I've alarmed 226 to get long, and I've also alarmed 215. Now, my trading plan for CRM is to lean long. Why? Because the 200 EMA on the daily comes in at 213, and there's also some structural support down here between 205 and 207. So while a breakdown or a move below 215 would definitely be bearish, in my mind, how far is it really going to go? To 213. The risk reward is not very good there. Okay, 210. A $5 move on a $220 stock? Not really. Even 205 is, only $10. But you go the other way, you're looking at, 15 to 17 just for starters on a gap fill, and then, potentially recovering after that. So I want to try a long here at 215 with a stop just below, maybe at the 200, a $2 stop, and try and get a move back up to 225 for starters, and then hopefully some follow through. Splunk, it's hard to tell, but there's a candle here on their earnings. Big gap down 23%. Notice where the wicks of the candle went. Right here to a prior swing low, which is resistance, and here to the bottom of the largest volume over price bar on the chart. So in between the range, you've got $15 where you can trade. You can go long against the low and look for a move back up to 170, or you can short 170 and look for a move back down, or you can get long above 170 and look for a $35 gap fill, or if everything falls apart, you're already below the 200. If price loses this big volume over price bar, I would think it'd be gone. If it came to, if it consolidated in here for a while and then resolved to the downside, the whole market's probably falling apart at that point. I would be a motivated seller and look for a move down in Splunk. Brazil, this is one of our weak US dollar commodity plays. Got a move above 35 yesterday. I am looking to get long that name out into March. February or March, give at least 60 days, 90 days to play out. And look for that persistent dollar weakness to prevail and, make a move up towards 39 or 40. Now, you can look at Vale, V-A-L-E. That's a Brazilian company that does is a big miner, iron ore company. It's been off to the races. You can look up, specific names, Brazilian-based names that will likely be doing well. Obviously, if you get one of those right, it's going to move a lot more, probably percentage-wise than the ETF Brazil. But options are pretty liquid here, and I think it is going to be a good general play on commodity strength, dollar weakness, reflation, restocking, re-inventory, all that kind of stuff as the vaccine rolls out. I like this long. Futu, we looked at yesterday as a nice breakout backtest name. Well, it got 3% better for us yesterday because it came back instead of putting in a green candle here to build on this tag of support. It came back. So as it stands now, if you're not in, now we're really close to a to key support. I think you can get long against 40 with a stop just below and trust that this breakout was real. You know, it's got to hold 40 to call that breakout real, and if it breaks below, it was a head fake. So I like this name long against 40. I'll have to look and see when earnings are. But for me, just because of my travel plans and all that kind of stuff, I would be looking personally out into January and possibly beyond for this particular trade. Into the close yesterday, I bought American Airlines January 16 calls. I got those for 170, and I bought it on the rug pull candle at the end of the day. So I like the chart here. Taking out the 200 for the first time since the big rug pull. So I like this against 15. Saw a lot of order flow. I was able to catch some intraday trading on it earlier, but as far as a position trade, I bought the January 16 calls for $1.70, and I'll put that in the trade tracker. If you thumb through, there's a lot of interesting names in the airline sector. Find one, or even the Jets ETF, JETS, is a good one. The options are becoming more and more liquid. People are trading that more. But I really like airlines. We had Love, Southwest Airlines, LUV. We had that as a long idea a couple of weeks ago. That has worked out fantastic if you took that. So I like airlines. And as the vaccine rolls out, travel is really going to pick up, I would imagine, as the confidence builds and the let's get back to normal. And I think travel is going to be a big part of that. You can certainly look at other specific hotel stocks. We looked at Expedia yesterday. I think above 130, I like Expedia to go higher after a big long consolidation. So look at those names. Don't overextend. Don't go nuts. You're not going to miss anything, but just get some exposure and balance with everything you've got in those sectors. I think that's going to play out well, and so I'll keep you posted on what I see. I'm going to flip through some other charts today and look at some other sectors to see if I can find some tight setups for you to consider going forward. Okay, let's wrap it up there. If you're new to the channel and you've liked what you've heard, please hit the subscribe button and the alarm bell, and you'll get all my new content. I hope you can tell I put a lot of effort into keying and providing to you the right levels so that you can focus on execution. I have a lot of confidence in my levels. I have a lot of confidence in my guidance. What you need to get confidence in is your execution of the plan. And I'm more than happy to help you with that. But if you come along for the ride and join the team, I think you're going to get a lot of pretty sharp opportunities to do some active swing trading going forward, and I think you'll benefit by being part of the group. Also, in the show notes, there are a couple links for the blog site and how to register for my content, and then you'll get a nice email and invitation to our trading room if you do that. Lots of good traders, lots of good ideas over the last week. The activity and camaraderie in the group is really building, and we'd love to have you join that. So if you're looking to join a friendly and knowledgeable trading community, please do that. We'd love to have you. So have a good morning of trade, and I'll talk to you soon. This has been Chris Buss with Traders Profit Compass. Talk to you next time.